Hey guys, Jason here from Positive, and just thought I'd sort of check in today with a bit of a live video. Just wanted to maybe just comment on something that I've been saying for quite a while. A couple of years ago, people were talking about the market having some challenges, and obviously we've seen places like Sydney and Melbourne adjusting after a fairly intense increase in price. We've had an adjustment 5, 8, 10% of the median value of properties. So that's pretty normal. That's a pretty normal thing in marketplaces. I've seen that happen 3 times. Properties go up in value and then they sort of come down a little bit. They overshoot their value, which is pretty normal. But listen, something going on right now, and I've been saying it for a while, is a massive undersupply coming to the marketplace in Australia. Now, why is there a massive undersupply? A lot of people are talking about a huge oversupply. And if we use a little bit of history here, if we look at a little bit of history, starting with the GFC, sort of 2009, 2010, the GFC heralded the largest property construction undersupply, residential property undersupply Australia had ever seen. Coming after the GFC, there was 5 or 6 years worth of lack of supply to the marketplace across the whole of Australia, or in the major places of Australia anyway, major cities. And that helped the prices shoot up massively, obviously. And then obviously prices going up, developers coming in, people developing, etc. That accelerated the development cycle, which started in sort of 14, 15, 16. And we're seeing the tail end of that 14, 15, 16 development cycle now, fizzle out. And according to a bunch of reports recently and the stats we've been seeing, the construction cycle, the development cycle has fallen off a cliff. Approvals in many cities are down 50, 60, 80% approvals for future dwellings, and construction starts have fallen off a cliff as well. So really what's interesting, and I started saying this about 2 years ago, is when the challenges come, when developers are getting pushed out of the marketplace, when buyers or investors are getting pushed out of the marketplace because the banks stopped lending, or 90% lending, interest-only lending, so that took people out of the marketplace. When the prices were high, people were, buyers and developers left the marketplace. So what's happening right now, the statistics are showing, which we were talking about ages ago, that the developers, a lot of developers have left the marketplace. Pre-sales and selling to investors is difficult, if not impossible. A lot of them have left the marketplace. And what's happening right now, we're in the midst of the new undersupply. We're going to see a massive undersupply play out in the next 18 months to 2 years in many, many places where there'll be more population, more demand, then there will be properties being brought to the marketplace. No matter, what's contributed to that? Obviously, the banking inquiry, obviously uncertainty about politics, who's in, who's out, whatever, and certainly lowering profits for developers and prices because prices have adjusted. So here's the drill. Here's what's going to be happening. We're in the midst of it right now, and some people might not feel that, but what's happening, which will show up in 18 months or 2 years, we've got a massive undersupply coming. You will first see the rents go. Here's my prediction: in the next 12, 18 months, 2 years, the rents are going to spike between 20 to 50% in some places. And then what will happen is the prices will follow after that, from an adjusted point of view. So the adjustment, whatever that might be, prices have come down a little bit. That capital growth will continue in, say, 3 to 5 years because of the undersupply. So anyway, guys, I hope that made sense. Reality is right now we are in an undersupply chain, or the start of the chain. We're seeing the finish of the previous chain of the supply chain. So right now it might not feel that way, but I can tell you in 2 to 3 years there won't be a lot of supply around. And right now, for me, prices are absolutely sharp and really good pricing, very good yields in the right places. Great time to be purchasing. My 2 favorite cities are Melbourne and Brisbane, for 2 different reasons. You can buy a couple of K from the CBD of Melbourne just unbelievably right now in the apartment markets, and Brisbane for the house and land markets is absolutely cracking. So, hey, if you want to know more about this stuff, we do our property investment get-togethers, masterclasses in every capital city of Australia, sometimes multiple times in each capital city. Check out our Facebook events page and come along, come and meet us. We'd love to see you at one of those nights, have a chat about your investing, what you're up to, strategies, and taking advantage of the potential undersupply that's floating around right now. See if you can make some profits into the future. All right, that's it from me. Hope all's well. Thanks for tuning in, you guys, and take care till I see you in person. Bye for now.